Hello, good morning, guys. My name is Peter Azikwe. I am a mortgage agent in from Ontario and mortgage associates in Alberta. So basically, what that means is I am licensed in two provinces. That's in Alberta and as well as in Ontario. Um, I've been in finance for at least 7 years. This will be my 8th year when it gets to August. And today, we will be talking a little bit about how to pay off your credit card debts and save yourself some money. Now, I know sometimes when we have huge debt on credit card, it becomes a burden to a whole lot of us, and sometimes it's something that it seems like it's never able to pay it off. And I know sometimes you've been told several times by banks that you can do a debt consolidation. I mean, that is one option. Basically, it just involves putting all your debts in one and just having one monthly payment. However, there's also a different way or a better way to pay off your credit cards and save yourself a whole lot of money. But basically, it all boils down to your affordability and how you are able to manage those those debts. And by affordability, I mean how much you think you can contribute to put away every month. So what we're going to be talking about today is something I call balance account transfer, or basically some people call it balance transfer. So if you haven't heard about that term before, basically balance transfer is when you use a credit card to pay off another credit card at a way cheaper interest. So most companies or financial institutions will offer you balance transfers for an interest rate going from 0% up until 3.99%. What is in there for you? So basically what that means is instead of you having to pay the 19.99% you're currently paying on your balance on your credit card, or paying the 21.99% you're paying on your credit card, when you do this balance transfer, it basically means you're going to take money from this credit card, pay off from this credit card that is offering you a promotional offer of 0% to maybe 3.99%, depending on the financial institution, and then pay off the one that you have where your interest rate is 19.99% or 21.99%. Okay. Now, what are the benefits in doing this? The benefits in doing this balance transfer, like I mentioned, is number one, and most importantly, it saves you money. Yes, I would show you what I mean by it saves you money by with my calculator that I set up here. And then another one is that eventually when it saves you money, it gives you that peace of mind, right? So everyone wants a peace of mind. Nobody likes to have that debt going in their mind, always worried about how much they have owing and how much they have to pay off. And then last but not least, convenience. So the convenience would be the part that I said, be sure that when you're going to do a balance transfer, you have to be into a situation whereby you can afford to make the payments in order to pay it off quicker. Okay. Now, another thing I should also mention is that most of these programs, they can go from 6 months up until 1 year. I would always recommend to look for anyone that goes from 10 months or 11 months to 1 year, just because it gives you a longer lifespan in paying it off. Okay. However, if you are not able to find the one that gives you a longer lifespan of, say, 12 months, then maybe get what you can. But remember, there are penalties which have to be talked about upon this, okay? Now, before I proceed to anything, I think it's best I even talk about these penalties, because I've seen some people who go into this balance account transfer and think it means they don't have to pay anything for 12 months. No, that's not it. So when you go into a balance transfer, there are conditions. The conditions will be that you must meet at least your minimum payment requirements, okay? As per your monthly balance, you must meet at least that to avoid the penalty switch. So the penalty would be that if you fail to make a payment in your balance transfer, your penalty could be that you will initiate the cash advance interest rate, which most likely will be 24.99% or 27.99%, depending on the institution. And you don't want that, okay? So what you want to aim for is always make sure you're making a minimum payment at least. But the idea of the balance transfer at the same time is that you don't want to be making a minimum payment. You want to be making a lump sum payment, because your goal here is that you're looking at a way you can pay off that debt within that set time frame you have in mind. Either you want to pay it off in 1 year, either you want to pay it off in 18 months. Now, I'll tell you why I said 18 months. 18 months in the sense that I will give myself as an example. I remember when I first started my balance transfer, I had $15,000 in debt. I was able to pay that off in 18 months. And how did I do that? So what I did is I took a balance transfer from one credit card, paid off the other one. And then when I seen that it was coming due to an end, what I did is I took an overdraft from the bank, okay? Paid off what was left of the overdraft, okay? Asked the company if they were still offering. So I paid off with the overdraft, the balance, the initial credit I used to do the balance transfer. Asked the financial institution if they were still offering the balance transfer, and they said yes. So what I did is after paying it off, I took another balance transfer, say for $5,000 or $6,000, and paid off the overdraft. Now I got 6 to 7 more months to pay off that 6 to 7,000, and then I was able to pay it off in 18 months. So again, in order to do this though, you have to be very, very disciplined when it comes to what kind of expenses you're going to find yourself in, okay? Your goal would be that you want to pay this debt off, and not that you want to pay it off and at the same time still be spending lavishly, because you don't want to pay off a particular credit card and then still be using that credit card. Your goal is to pay it off to save that money, to get that peace of mind, and then have that convenience of doing things, you know what I mean? So always know that it is highly important that you have to discipline yourself and stay very committed in achieving this. So what I'm going to show you guys real quick now is just a calculator of how this balance transfer works. And then you can see what I'm talking about, okay? So over here, as you can see, this is what I call the balance transfer calculator. Over here would be your current balance. Here will be your current interest rate. So I have two scenarios. Scenario 1 has 19.99%. Scenario 2 has 21.99%. Okay. Now here is the savings. This part talks about the promo rates. See here, scenario 1 is where it's 0.0%. And then scenario 2 is where it has 1.99% promotional rate, and then another one is 3.99% promotional rate. Now, bear in mind, here I have 21.99%, and here I have 3.99%. So basically, you would see that at the end of the day, you're probably saving the same. It's just depending on the scenario, okay? So I'll show you how it works. So let's say, for instance, you have a $20,000 debt in credit card, okay? Now, did you see the magic that happened here? So you can see here at 19.99%, this is how much it costs you in interest every year, $3,943.23. You see that? Now, if you receive the promotional offer for 1 year, this is how much you save, 0%, $3,943.23. That's how much you get to save because you have 0%. If you receive a promotional offer for 1.99%, this is how much you get to save, $3,550. With a balance transfer, what that means is when you pay lump sum every month, instead of the bank taking that huge money in interest, you have the opportunity to pay it off quicker because now you're saving a whole lot of money in interest, which means more of your money is going towards your principal and very little is going into your interest, which means that is why you see here I have done the annual savings. $3,550 is what you could save in a debt of $20,000. So let's use the same scenario if it was for the 21.99%. So 21, let's just put here, say 20,000. So you can see here at 20,000, this is how much you pay at 21.99%. So 4,337, that is how much you spend every year in interest. You see, that's a whole lot of money to be given to the bank, right? And you don't want that. So your goal is your goal is when you do this balance account transfer or balance transfer, as some financial institutions call it, you can use this as a way to pay off your debt quicker. Now look, you see what I'm saying? See, if you get a promotional offer of 3.99%, for instance, for 1 year, you see here, it says you're saving $3,550, which means $3,550 that is supposed to go to interest on your credit card will be going directly into your savings. I hope that makes sense. So that being said, I will do my best to see if I can upload that calculator so you can play with it yourself. If I can, you can send me an email. It's going to be peterazix@gmail.com. So Peter will be Peter, Azix will be A for Apple, Z for Zebra, I for India, K for Kilo, S for Sam @gmail.com. And I should be able to send you a copy of the Excel sheet and then you can work with it, okay? Now, I was going to make some referral. I do know that there are some financial institutions that do offer that. However, it is highly important that you check with them. So, example, I know MBNA, it's one. They always offer the 0% promotional offer. Another one would be Service Credit Union. Now, why I mentioned that is because I used to work with Service Credit Union, and I know that was one major way that I used to pay off my debt. So there is one, but I know with Service Credit Union, in order for you to do the balance account transfer, you might want to become a member first, because I think that's their criteria. Now, I do know that some other financial institution that could be offering it. It all boils down to you checking with them. You could also check with your financial institution if they're offering it. But again, some things to note in mind is you have to qualify for those credit cards, and you have to be able to qualify for the amount you seek, and make sure that if you're going to do a balance account transfer, that you're disciplined and you're able to stay committed to the amount of money you want to pay. So basically what it means is when you do the transfer, you want to set up a goal for yourself on how much you want to be able to pay every month in order to pay off that debt quicker. Okay? Because if you could do that, then you could be off debt in say 1 year to 18 months or even 2 years, depending on how long you want to stretch it. Thank you once again for watching. My name again is Peter Ezekwe. I'm a mortgage agent, or mortgage associate as mentioned, licensed in both Alberta and Ontario. Thank you for watching. Enjoy.